over and discuss.
Yep, we're live.
We're live? All right. Hi, everybody. I'm Dennis Lianku, and I'm here with my friend, Suraj Sina.
Hey everyone, I'm Suraj. We welcome you all to this first episode of Decoding Venture. Dennis, why don't you introduce the audience to Decoding Venture?
All right. Decoding Venture is exactly how it sounds. We're going to be taking apart everything that you thought you knew about the investment financial landscape. We're going to make sure that we cover all of the cool little bits that's going on in emerging markets and current markets and make sure that we have a discussion. I mean, you, the individual watching, us, people talking, and having a comprehensive landscape in which we can learn from one another. And because of our platform, we'll be able to have you guys come on and we can talk, or you could just watch. So let's get right into it.
Um, a little bit more about Decoding Venture, though, is none of this is intended to be financial advice. It all comes from a place of learning, and like we want to learn just as much as you want to learn. And that is going to be the mission throughout all our episodes of Decoding Venture. So let's dive a little bit into our topic. So it's a very interesting one and something that a lot of people have been talking about and that has sort of gained popularity throughout the last 2 years, especially with the boom of crowdfunding platforms like Kickstarter, and now even some equity crowdfunding platforms like WeFunder.
Yep. And if you haven't really guessed, crowdfunding, it's been around for a long time. It's probably over a couple thousand years. The term itself didn't come into fruition until recently. About 2006, there's an entrepreneur named Michael Sullivan who was launching his company called Fundavlog, and he was one of the first person to use that term in a more popular sense as we know it today. But over the past couple thousand years, books have been crowdfunded on a subscription-based model where people sign up and say, "Hey, I'll pay for your book if you make it." And more modern crowdfunding, before the term was coined, came about in around the late 90s. There was a English rock band called Marillion that crowdfunded their entire album, and they saw a lot of success with it. They managed to fire their whole management, and they did the whole album based off of crowdfunding, which is fantastic. So if that doesn't show you the power of crowdfunding, you'll see we have more topics to talk about.
Crowdfunding has certainly been one of the biggest boons to an entrepreneur in this day and age. It provides access to capital to pretty much anyone, and it makes the whole process of collecting funds for startups more democratic, and it also ensures that a lot of control does not lie in one hand. For example, one person not buying out 10% of the company at once. This way, the ownership also gets divided. So, pretty interesting concept. Um, Looking particularly between 2012 and 2016, it's been a very exciting and positive time for US businesses. The Jobs Act, which essentially enables businesses to collect equity crowdfunding, was passed in 2012. And in 2016, essentially, it allowed even non-accredited investors to be able to participate in equity crowdfunding. So this has really expanded the market and the reach that a particular startup or entrepreneur has when it comes to collecting capital. And certainly, it's a very good time to be an entrepreneur.
Yeah, absolutely. And going along the democratic form of this, the ability to raise funds here is sort of the spectrum in which crowdfunding lays upon, which you have on one end of the spectrum, like a purely reward based. This is like friends, family. They're raising the money. They have no expectation of the product being released ever. It's usually this is like Patreon or like Kickstarter. Then you have equity based in which is obvious what it is. But in most cases, that can suffer from issues like information asymmetry, where one party has more information than the other, and that's where you have a huge amount of risk. Where if you come in as the investor who is uninformed, what are the chances do you have on reaping the benefits of this potential product or service rising? And then you have the other end of the spectrum, like ICOs, where you can use cryptocurrency in the form of tokenized securities. And that's been more recent, and it's been probably a really great way to like find better sources of revenue. So what
So
do you think about the ICO or STO trend?
So about the STO trend, actually, I think I think it's a very very exciting asset class, and I'm fairly bullish on it in the near term, and I would say like for the next 5 to 10 years, I think we should see quite a few ICOs in the next 5 or 10 years that really take off into multi-billion-dollar companies and really succeed. It may not just be companies that are tokenized. It could be anything like real estate assets, or maybe ownership in like precious metals. Like anything could be tokenized with the help of STOs, and I think that's what's very exciting. And I think just the possibilities for, let's say, there's a country where equity crowdfunding is banned. There are actually countries, even now it's banned in India. You only have debt-based crowdfunding. You do not have equity-based crowdfunding. Similarly, there are other countries as well on the planet where equity-based crowdfunding is not allowed. So it gives entrepreneurs from these regions an opportunity to sort of, maybe set up a company somewhere outside their home countries, which are crypto friendly, and then get capital and get that exposure from the rest of the world for their capital needs. So I think it's a very good mechanism that way.
Yeah, I absolutely I agree. And what's cool about STOs is, uh, it's more often than not a more tangible asset compared to the ICO space. And for a lot of financial elite investors, that's more favorable. They understand that market a little bit better. It's an easier foothold for them to get in. And it's true, we've been seeing a lot more um, high power investors stepping into the space, or enterprise level investing. And if we want to see more of them come in, then what they're going to be looking for is probably a level of production in the progress of how these STOs are turning out. Roadmaps for them are very important. Otherwise, there's no reason for them to invest in an idea that just fell off a tree.
That's true. I think that's a very important point. I think at the end of the day, the companies that responsibly accept capital are the ones that end up succeeding. And this is because you're only asking for how much you need, as opposed to like in the long term. I think companies that are being honest and asking for the amount of money that they actually need to grow their operations will end up managing those finances better. I think it's just 1 + 1 = 2. That's just the nature of things. A lot of companies, a lot of ICOs in the past, they're facing these problems because they wanted a lot of money, and they were sort of structured in such a way where they wanted to maximize how much money they made during the peak of the bubble. And then when the burst came, they were the first ones to suffer.
Absolutely. and a lot of it was also due to they had this narrow focus on how much capital can we raise before we've even uh, gone beyond an MVP or have a roadmap set that is that has like a sensible strategy. And because they have that focus on making the money, a lot of it ends up turning to be a pump and dump because at the end of the day, they don't care to focus about their product 3 months down the line. They just, you know, make their money and they exit, and that's bad for everybody.
Yeah, that's certainly been one of the sticking points of ICOs because of these exit scams. A lot of people have lost confidence in investing in those sorts of asset classes. I suppose as the years go by, as there are better KYC policies in place, I think, and not just KYC, even probably knowing the business itself. So I think these should be like weeded out from the system as the years go by. I think I think the systems should become easier for people to participate in, and I also think we should see greater adoption of STOs, ICOs, and blockchain-based funding.
True. That's kind of been a big hurdle, like you said, with adoption is it's a little convoluted in order to take like your first steps in because it's a new asset class, and a lot of people don't really understand how it works. So with the whole, uh, at the basic level of trying to invest in this stuff is, you get your wallet, you say, okay, where do I, how do I go from USD to Bitcoin or Ethereum or whatever? And a lot of those steps, they turn people off because they want to be able to say, okay, hey, I want to invest in this and I want to do it now. And the easiest way I think about it is like if grandma could use Bitcoin in like 2 clicks, you'll get a lot more people jumping into the space.
Yeah, 100% agreed. I really hope that ends up being the case. And yeah, as you rightly point out, most of these crypto funding mechanisms, they're so obscured from the rest of the world. The rest of the world does not actually know or care about these funding mechanisms. It's the only reason they're not popular is this whole, oh, get Bitcoin first or get Ethereum first, and then send it to some fishy address, and only to know that maybe your money would be like stolen by irresponsible fund collecting mechanism. So it's yeah, I think usability would and marketability of this technology would be the biggest determinants in its success. And I think I really hope like in the next 2-3 years those things would improve.
Yeah. And I really do see it improving in the next like 2, 3 years because a lot more people are becoming aware of these issues. And uh, it really seems to me to be like the landscape was we had all of these highly technically adept individuals who, they went and they developed all these algorithms and put it all together. And we have an amazing base there for everything to happen. Now we have to build on top of that and say, okay, we got to make it easy for people to use. That's our next step. How can we accomplish that? Having come from this like extremely technical landscape where, you know, 70 to 80% of the people, they don't really care about all of the ones and zeros behind the scenes. They want an app where they can scroll and click a button.
Yeah, I agree. Sometimes I wish I could do that too, but end of the day, I think I've started to enjoy using these really difficult to use crypto payment systems and payment transfer mechanisms.
Yeah.
it, I guess it's an acquired taste, but I really hope they become more usable.
hmm Yeah, it's kind of like I'm from Chicago, and we have this neighborhood called Wicker Park, which is known for its hipster population. It's kind of like you're using like your wallet and your hardware wallet and just like unlocking wallets and sending to different addresses and doing all of these steps where you feel really cool about it because it's kind of underground. And then once stuff starts to become really easy to use, and you go, oh, come on, I was in this game when it was like I had to transfer between one wallet to another to get to different exchanges and all that jazz. And it's going to be funny seeing the mindset of how people that are veteran users on social media, how they're going to be commenting on it once usability starts to improve for the everyday individual. So that's why I liken it as to like the hipsters who they sit there in their little underground clubs and coffee shops, and they're like, "Oh, have you heard this record? It's only on vinyl." And there's like only an obscure way of trying to like get the record off eBay or something, and no one has heard of this artist. It's kind of the same.
So I think I have an interesting concept:
Sure.
usability and increase in market cap. Do you think they're positively correlated or
Hmm.
strongly correlated?
Right off the bat, I would say yes. Uh, given my Here's my example. Uh, Apple, I believe, has a higher market share in paid apps in app market, right? Higher than Google.
Mm-hmm.
So w- I would kind of venture to say, possibly due to improved usability might be one of the cases, which I would say would then positively correlate them. But I would love to know if that's wrong. Like that'd be really cool to find out if usability and market cap is not correlated.
I would tend to agree. I would think they are positively correlated. Maybe I think maybe that's the reason why augmented reality took off much faster than virtual reality, even though they were building out more devices for virtual reality than augmented reality. It's because usability is much higher for augmented reality. You don't have to wear anything. You don't have to like have a separate equipment like a good enough phone would do.
Hmm.
And it's very intuitive to use virtual objects over a real environment as opposed to being transported to like a whole different like world and reality. So mm,
Yeah, I mean, it sounds about right to me. It's that's a really tough topic to tackle, I think, because there's so many different elements in terms of um, psychology, physiology, physics, between VR versus AR. But, you know, I don't think it's too wrong to just keep it simple and say, yeah, the usability of AR is a lot more than VR due to all the points that you brought up. I mean, you pull your phone out like and you can just you can find your like that app that Microsoft had where you put it up and it's like a compass, and as you turn it can show all the different objects using the GPS nearby, and like that's very easy to use. You don't need to be told instructions. And with VR, what do you got to do when you first put it on? They tell you, okay, use this pinching gesture or like rotating gesture in order to use it, and that's tough to translate to users to tell them how to use. So yeah, usability and market cap definitely correlated positively.
okay, I think we touched upon a lot of points this episode. Just to sort of wrap it up from my end, a few points that I would want the viewers to take away is one, if you're an entrepreneur, if you're a founder, and you're looking to get funded, do consider equity crowdfunding as a serious option. Um, Leverage the existing funding platforms and try to get that initial seed funding, or if you have a product out, get the funding required through equity crowdfunding. There may be around like 6 to 10% that the platforms themselves charge, but at the end of the day you're still getting access to a lot of capital, and that might not be bad. Second thing I would like for a regular retail trader or investor is there are opportunities every day, and there are opportunities for you as well to sort of get in on some good venture deals. Equity crowdfunding platforms are a good platform for you to invest as well. They might not be a terrible option. And yeah, Dennis, any points that you would like to conclude with?
Not so much. I mean, I agree with the recap. Once again, remember when you go the equity crowdfunding route, what's great is that it opens you up to additional investors that normally wouldn't be able to invest, and that's always a good thing, right? You're looking to get your funding, and if that's what's going to get you more, that should always be viewed as a positive opportunity. And you could have a dialogue, very transparent dialogue with those investors as well, and they'll in the future would be considering to invest in you again if there's positive outcome on both ends of the spectrum. So I'll just end with that.
Okay, Dennis. Until next time, hope you have a good week ahead of you, and yeah, see you next week. And viewers, next week we will have a special guest with us, who will be revealed at next week. So yeah, just be patient. We will have a very special guest for you, and a very special topic. Until next time.
Okay. Bye, everyone.
Bye.